These short video chapters around best practices and lessons learned are designed to help you succeed in growing your business. Dave Bauer is the Chief Financial Officer of Lubar & Company, a family office based in Milwaukee that has been investing in private businesses for over 40 years. I've asked Dave to share his thoughts about the importance of risk management in the role of a Chief Financial Officer of a company. Welcome, Dave.
Thank you, Dan. It's an honor to be here.
Dave, what kinds of things do you think about when it comes to risk management?
Well, as we think about risk management, there's typically two ways that it can be addressed. One, the likelihood of variability in the occurrence of the event can be reduced. And secondly, you could transfer the risk to someone else. I'll give you an example. One of our businesses is heavily reliant on the cost of a commodity in its operations. And we can address that one of two ways. We can either have a price to our customers that varies as the commodity cost changes through a surcharge or a premium. Or second, we can also try to fix the commodity cost through a derivative contract. So that's two ways that we can address the commodity risk. Also, one thing to keep in mind, many people talk about derivatives as being highly risky. If used right, they can actually reduce the risk to a business and create a higher degree of certainty in their results.
Dave, on a slightly different risk topic, interest rates have been historically low for an extended period of time, but many economists are projecting that they'll rise in the near future. How do you think about interest rate risk management?
Well, Dan, we address interest rate management in taking a look at the duration of the credit exposure. For generally short duration agreements, we tend to not be as worried about the rise of interest rates because of the time frame. But for longer duration or longer amortizing agreements, we will typically look at hedging to fix that exposure.
What other areas of risk management do you expect a CFO to focus on?
Well, Dan, there's several that they should be focusing on, but I'll just talk about two today. One, health insurance. The risk of rising costs to an employer, or also the risk of uncertainty of healthcare costs to the individual employee, is something that should be addressed. We've been very successful in our companies using consumer-driven healthcare models that allow us to mitigate the cost and the rate increases of insurance at our companies. A second area that we do look at relates to asset protection risk, which is near and dear to a banker. And it's the issue of protecting the collateral value or the asset value of assets in a business. And to do that, we use that by transferring the risk through insurance and making sure that we have the right broker who really understands the policies and also understands the insurance companies and their willingness to pay. That's pretty important as well.
Dave, thank you for sharing your thoughts today.
Thank you for having me today, Dan.
Please look for other chapters in our Business Insight series and tell us what you would like to know more about.